Today is June 3rd, and this is ADM Investor Services Weekly Market Wrap-Up. The views and opinions expressed here today are solely those of our guests and should not be construed as the opinions or views of ADM Investor Services or Archer Daniels Midland Company. Our guests today are David Hightower, President of the Hightower Report, and Alan Bush, ADMIS's Senior Financial Economist. Dave, in both the energy markets and the grain markets, we started the year with historically bearish views and conditions. What has changed so dramatically since the start of the year?
Well, it's important that we realize this is real. It's not anticipatory of getting rid of the negative fundamentals. We've really come in and reduced supply. Demand's been better than we expected, and so far this year, instead of expecting a correction, this is probably going to be a base value zone. So I think we've got markets, and we didn't think we'd have markets.
Alan, this week there were several Chinese reports that were mixed at best. Has China turned the corner with its economy, or is it in for a hard landing?
Okay, no, I think absolutely that China has turned the corner. Now, we have had a couple of reports that were not as good as some had expected, but earlier in the year there was record bank lending in China, and there have been, of course, large increases in commodity prices. So there are very, I think, substantial indications, credible indications that China is turning the corner, and I think this is a situation that will be long-lasting.
You know, I might add that they've had 10 out of the last 11 weeks, they've saw very significant declines in Shanghai copper stocks. So, you know, that's something that's kind of hard to fake, that they're moving that much of an industrial input.
Dave, the July crude oil traded back above $50 a barrel this week and has been rising steadily since mid-February. Do you think this trend can continue?
I do. We probably would have been higher this week significantly if it weren't for OPEC failing to get together on a production cut, because you look at the EIA data and it's seen a little bit of a chipping away at that supply. I mean, Cushing, Oklahoma was so full we didn't have anywhere to put the barrels, and now it's that big, huge freight train is starting to shift in the opposite direction.
Alan, can you please comment on the upcoming Federal Reserve meeting? What are your thoughts regarding Fed policy? Will the Fed raise interest rates this month?
I think absolutely not. First of all, we do have the referendum in the UK on the 23rd for the UK to potentially leave the European Union. So I think the Fed would not want to do anything that would get that would possibly disrupt anything with that referendum, at least the uncertainties of that. Also, now with the non-farm payroll coming in as weak as it did today, that places the probability of a June rate increase now at just 4%. So no rate increase in June.
Dave, would you agree with Alan's perspective on the upcoming Fed meeting?
I would, and this was a shock this morning to have that soft of a number. And even if you add back in the strikes and the people that would have been working, you still have a weak number. But I would maintain you got to be careful that in this transition from the spring into summer, those revisions can be quite significant. And we really have a Fed that's chomping at the bit. I agree with Alan. It's going to be very difficult to do something ahead of that British exit.
Turning to the grain markets, Dave, can you comment on the markets, where we are today, what you believe we might see throughout the summer and moving into harvest?
Well, we have a June 10th USDA report. It's not likely that they'll change acres or yield in this report, but they could. But what's really important is in May we came in and revised supply downward from South America, which means we're going to have better demand in North America. We've also seen demand remain very strong. I mean, export sales, we're running 95% of the USDA necessary demand figure. So I would see further minor downward revisions in production and minor upward revisions in demand, and so that may justify a little bit higher pricing, particularly in the corn market.
Let's talk about precious metals. We had a spectacular advance in both gold and silver earlier this year. Some of the gains have now been given back. In fact, some analysts are saying that these markets have topped. What are your opinions?
Well, this is a demand-driven market. It's an investor demand-driven market, and as of yesterday, gold derivative holdings reached the highest level since October of 2013. So sometimes we get caught up in the futures market and we see this hard break, and we forget that the investors are not quite so quick to change. And the fact that gold came down to $1,200 and then bounced hard from that, same thing in the silver market, bounced hard from that. And one last thing, India posted a extremely strong GDP rating. So India and China are about at the same GDP, which is 3 and 4 times more than other places in the world, and they're the big buyers. So we saw some value this week in the gold market, and corrections should be bought.
Finally, if I was to ask about one trade that people should be looking at right now or in the very near future, what would that be?
Well, my choice would be gold. I think gold is oversold now with the break that it has suffered with all of the hawkish comments from the Fed over the last 3 weeks. And of course now it appears that the Fed will not be able to raise rates anytime soon. So any weakness in gold and silver should be viewed as a buying opportunity. Next year I can see gold at over $1,400 and I would see silver at above $19.
I would probably recommend doing some short-dated new crop options on soybeans, just because, not because I think that the rally's over, but I think we are overbought, and we probably bought some acres with the price action. And just from a shorter-term perspective, I'd be a buyer, $10, $10.50, $10 bear put spread in the new crop September. And I'd also consider, if someone said to me, the guns to my head, what would be the most high probability, least volatility, I'd probably be a buyer of the copper market.
Thank you both. Remember, the thoughts and opinions expressed here today are solely those of our guests and should not be construed as the thoughts or opinions of ADM Investor Services or Archer Daniels Midland Company. If you would like more information regarding our brokerage and risk management services, or would like to find an ADMIS affiliated broker near you, please visit www.admis.com.